Right, hi everyone. Welcome to the IX training room with me, Richard Perry, market analyst for INFINOX. It's Wednesday and time for another new IX training room, which we do every Wednesday. If you aren't sure about that, you can join the YouTube channel and you'll get notifications on that. But yeah, thanks for coming, everyone. And what I'm going to be talking about today, three key factors that are driving markets at the moment. We've got some dollar strength, which is affecting markets across the board. We've got dollar strength affecting Forex majors. We've got that pulling on commodities lower, and also a little bit of interest through equity markets as well. So before I get going, however, I'm going to just quickly mention that we have a disclaimer, and the disclaimer is that I'll be talking about live market information, and that everything I talk about should be just used as information and for your information purposes only. It's not to be construed as investment advice or anything like that. So please don't go running around thinking that I'm telling you what to do, because I'm not. That is not what I'm here for. I'm here to be just talking about information and nothing else other than that. Or that's exactly what I'm supposed to be told anyway. So as I said, three key themes for today: dollar strength, also sterling weakness as well. Sterling weakness, which has been affected by a few things, really. We've got the Bank of England rates decision, but also how the Bank of England outlook is moving forward and how the inflation data today has impacted on that. And also looking at equity markets as well, specifically European equities. European equity markets have been very strong, performing very well. However, are they beginning to look a little bit tired? I'll have a look at that. Now, what you can see here is the platform. This is the IX1 trading platform that we have within INFINOX. This is a brand new platform that we've just been developing over recent months, and we've released it. And I think it's a very good platform. It's a massive, in my opinion, a massive upgrade on MT4, MT5. So that's certainly something that we are proud of, and we'll be certainly focusing on in the IX trading room as a result. But this is the platform, and you can see here I've got sterling dollar, which is falling, and that falling in sterling dollar comes about due to the fact that we've got the dollar which is strengthening. Now, dollar strength. Now, what we see on dollar strength is that just in the last few weeks, really, last couple of weeks, ever since the non-farm payrolls report, there's been a massive sort of rebound in the dollar. That big corrective move in the dollar since October has started to turn around. And this, on dollar index, could turn into a full flag pattern. And it really is threatening to maybe even do that today. You see a sort of closing levels above 104, big figure on dollar index. That, for me, would probably constitute a bull flag pattern. If it got above 104.65, it really would be up and away to test that 105.63 mark. Now, what's driving this move is that the market is originally, in the last few months, we had seen, this is Fed funds futures, we had seen the expectation of US interest rate hikes sort of coming in around about 5%. Well, they're up around 5.25% now as a terminal rate. So they're pricing in a rate hike in March and another one in May now. So that's interesting. Fairly close to pricing in another rate hike in May, and markets are taking note of this. They are reacting from this. The dollar is rallying. We're also seeing, look at this 2-year Treasury yield, which broke out again yesterday after the US inflation data. US inflation didn't fall as much as maybe had expected, and subsequently Treasury yields moved higher, helping to move the dollar higher, and subsequently we've seen that playing out across major Forex. And one of the key sort of markets we've seen this playing out through is sterling dollar. Actually, if I show you the markets board today, it's on a different platform actually. You can see here outperformance of the dollar on the euro dollar, sterling dollar, dollar yen moving higher. We've also got Canadian dollar weakness, Swiss franc weakness, dollar strength across the board, Aussie dollar down, Kiwi dollar down. So all of these factors are certainly playing out. Here's the markets board on the IX1 trading platform. You can see the signals there. However, how does this mean? What does this mean for these major forex pairs? Now, what we've seen is that the dollar was weakening, as I showed you on that dollar index chart, throughout the last few months, but it's turning over, isn't it? This is a chart that really does give me cause for concern, and the reason, there are a few reasons really. First of all, starting with this moving average here, the 55-day moving average. Let's go out a couple of levels. You can see that 55-day moving average was, I mean, it was a gauge, a good gauge actually, all the way down throughout 2022 when the dollar was strengthening. It became a basis of support on the way up. However, as you can see here, it's now flattening off, starting to potentially turn lower. It's becoming a basis of resistance. So that doesn't bode especially well. Also, the RSI, the Relative Strength Index, again, Relative Strength Index is now more correctively configured. It was positively configured throughout the rally. You can see this RSI above 50. Came back, found support around sort of 45, so between 40 and 50, and went higher again as the rally went off in January. But as the market has fallen over again, falling under these moving averages, you can see the RSI failing at 50. Now that, for me, that doesn't bode well on a medium-term basis. This tells me downside pressure is growing on dollar, on cable. Now, 1965 is that reaction low. 1961, sorry, 1961 was that reaction low on the 7th of Feb. If it breaks through that, you really are testing the 1840 level there on dollar index, on sterling dollar. Now, one of the other reasons why we're looking out for today is this sterling weakness. Now, sterling weakness has come as UK inflation has fallen. See here on the economic calendar for this morning, UK inflation has fallen 10.1. The consensus was 10.3 on the headline, but look at this, core inflation 5.8, down from 6.3. Core inflation expected to be 6.2, so much lower than expected inflation for the UK. Now, what does that mean? Well, the Bank of England hiked by 50 basis points last time out. The expectation is for Bank of England to hike by 25 basis points now in March, but possibly if that inflation does continue to fall and the data for February and March also continue the trend of downside move in inflation, then you're possibly even going to see that inflation falling means that the Bank of England doesn't hike beyond that 25 basis points in March. So there is a very realistic potential for sterling underperformance now. Markets have already sort of been toying with the fact that the dollar that the Federal Reserve was stepping off the gas, but they've still yet to really price in that sterling is underperforming. That UK interest rates may be also starting to plateau. So that drives downside potential in sterling dollar, but also my preferred one, I think, would be, my preferred play in this is on euro sterling. Now, euro sterling has picked up sharply today, and I think a test of the 90 big figure level is well within the realms of possibility. That's basically where we were just a couple of weeks ago, 89.90. Basically where we were a couple of weeks ago. I reckon a retest of that is well on the cards. Now, also, I think that reaction low here of yesterday, which was 88.02, so basically 88th figure, is now a key low. So you basically got a big low at 88 big figure and a likely move towards 90 big figure support, resistance, sorry. So this could mean, and I'm going to change my view here slightly. This could mean that we now get a possible trade, and I'm going to demonstrate this with the platform. Euro sterling. See here on the, let me take that as a full screen view. put on a possible trade. So open up the trade box, which is this icon here. Right, and I would say that I think that there is a definite possibility for a trade here. I think if, as you can see, this just slightly pulled back. So a slight unwind, but you've got some support that comes in around the breakout levels. So if I want to, I'd want to stop below 88 big figure. So let's say 87.90. And I want to test of that 90 big figure. So basically that's sort of round trip of 210 pips. So if you go two-thirds, one-third of that, you basically want to do twice the potential profit to loss ratio. So that would be two-thirds profit to one-third potential of the stop. So basically that means that an entry point around about the 88.60 mark, which is not a million miles off where that support is. So that would be a buy limit order at 0.8860. You see that the lines have already come in, but the stop loss is not where I want it to be. So I've just done a few calculations here. I wanted, as I said, I wanted the stop loss to be a price stop loss, and that again 87.90, which is 70 pips from the 86 figure level, 70 pip. And so if I wanted the 90 big figure target, that would be 9 big figure. That's basically where I'm at. So, okay, but the last thing you need to do on that is the trade size, because at the moment I'm risking it's about 70 pounds worth of risk. Now, if that's okay to your trading account, I mean, for example, on a $1,000 trading account, that's still 7% of the account. That's a big trade. I don't want to be trading in that bigger size. So I would need to do if I was doing a 0.1 lot trade, that would be $70 worth of trade risk. I would need to do for the account I've got for say $1,000 account, you'd be looking at maybe 2 to 3% risk per trade. Now you can do that in two ways. You can do it as a percentage of equity. Now the thing is, the account I'm running here is a much bigger than $1,000 account, so that would work here. So I'd be doing it in lots, and 2 to 3% on that is around about 0.03 lots. So there you go. And you're doing a limit order, buy limit order, and you've got the stop under here. You've got the target just above. Let's see here, target here, 90 big figure. So we're good to go. Place the trade. It's not yet filled because it is a pending order. And so if I do pending orders, it is there. Trading pending order. Right, all good. So that's sterling and a possible trade on euro sterling. All good in the hood. Right, now the last thing I wanted to talk about today was on European equities. Now, go back onto my analysis layout. You can see here. Now, European equities, starting off with FTSE 100. FTSE 100 is really strong at the moment. Let me show you something, which is not this. It's this. Now, European equities are strong at the moment, and look at the DAX and the CAC. This is year to date. Look at the performance of DAX and CAC. Really strong. Not as strong as the Nasdaq, mind you, but still strong. FTSE 100 is slow and steady, a steady eddy. Likes it really slow to perform. In terms of volatility, FTSE 100 is probably the least volatile of all of them, and it sort of is reflected in the fact that the underperformance, slightly underperforming, certainly CAC and DAX in the European space, which are much better performers. But what we do have is still FTSE 100 at all-time highs today, 8,005. Wow, that is quite an impressive move. But is it something that you still want to be chasing higher. This is what concerns me about FTSE 100. We get the crosshair. Is this RSI? Last time it sort of got to these sort of levels. I mean, it basically twice in a row actually. It's got to this sort of level above 70 on the RSI, then started to drift over. Started to drift back and actually had a reasonable size correction before rallying again. But it happened again in January. It happened in early December, and then mid-January. Similar story. Had RSI above 70, then it just started to drift back. And you got better entry price, really. Now, the outlook for FTSE 100 is still positive. You've still got this run of higher lows, higher highs. Moving averages all higher. Momentum indicators all strong. But, as I said to you, is this the moment to be chasing FTSE 100 higher? There are probably better entry points to be had on FTSE 100, bearing in mind that equity markets generally still pretty risk positive, despite the fact that the dollar's been strong. But still, what we've got is the fact that FTSE 100 is a little bit overbought. It might have a near-term pullback due to that. It's had a good reaction today, actually. If you look at this candle, go on full screen. Today's candle, look at that. Actually, initial weakness and then rebounded back to all-time highs again. So maybe it's got a couple more days in it. But as I said, this RSI up at these sort of levels does give me a little bit of cause for concern. I think if you stuck it on the 4-hour chart, let's see what happens. Yeah, actually, still okay. Still okay. No real negative divergences, which is the sort of thing that you'd be looking out for possible sort of corrective moves. No real negative divergence yet on that move, but still, I think there is room, I think, on the daily chart, certainly for an unwind near term, given the fact that the RSI is pretty high, pretty strong, arguably overbought. So, as I said to you, the last two times, that in December and this one in mid-Jan, you did see this drift back, and you had, well, 7714 was the reaction, those 7, 8, so yeah, 160, 170 ticks of downside slip basically before the market found support again. So there is possibility of an unwind. Very quickly, looking at the DAX. Arguably similar, bit stretched, but actually the DAX looks okay. But again, there is this prospect that when it does get a little bit overbought, it starts to drift a bit. There was sort of a few sort of wishy-washy candles, then it started to drift lower. Again, this one here, back in mid-Jan, got overbought on the RSI, and then started to sort of consolidate a bit. So there is the prospect of better entry points, I think, on these European equity markets that could give an opportunity. So yeah. Full screen. Right. So yeah, thanks for coming today, everyone. I think this pretty much be done. I've actually overrun today. I shouldn't be doing that, but there we go. But yeah, thank you very much for coming. And what I'm going to do is I'm going to leave you with a short video to basically explain about what we do with the IX Trading Room. And as I said to you at the beginning, if you want to if you're on YouTube, click on the bell to subscribe to our channel, and then you can get notifications of any YouTube live videos that we're doing, webinars in this case, I suppose. But yeah, you get notifications of what we're doing. So come and join us, and I will hopefully speak to you again next week. Don't forget, next week, same time, same place, Wednesday, 4 p.m. UK time, and we're good to go. So thank you very much, and I'll speak to you then.